Hey, it's Rob, the Ignorant Entrepreneur, and I got two top Robinhood stocks poised for bull runs. Now, you all know with Robinhood, operating as almost like a heat map for where retail investors are putting their money, Penn National Gaming and Nike are two companies that rank among the top 100 most widely held stocks. While not every popular company on Robinhood's platform makes a good investment, these two stocks have what it takes to beat the market as they update their business models for a post-pandemic world. Let's dive deeper into why these two Robinhood stocks are poised for bull runs. First, we have Penn National Gaming. The coronavirus pandemic is winding down, and share prices among casino operators like Penn National Gaming are soaring as the industry recovers. The stock price has risen 44% in just 2021, and it looks like it's posed for continued growth as the company's physical casino business bounces back just in time for its pivot to sports betting and online gambling to power the next leg of expansion. The United States is vaccinating up to 2.4 million Americans per day, and the country could reach herd immunity by fall, according to Dr. Fauci. Penn National stands to benefit from this trend because it needs people to feel safe enough to travel and gamble at its properties. Penn's focus on U.S. regional casinos gives it an advantage over rivals like Melco Resorts and MGM Resorts, operating in slower recovery gambling hubs like Las Vegas and Macau, China. Fourth quarter revenue fell 23% to $1 billion, but that's much better than Melco and MGM, which fell 64 and 53% respectively in their most recent quarterly periods. Over the long term, Penn National plans to drive growth through a pivot to sports betting. So far, the company has performed well in its early markets like Pennsylvania, where market share has grown from 7.2% in September to 13.4% in December, representing a handle or the total amount of players have bet of roughly 72 million. So far, 25 states and Washington, D.C. have legal sports betting, and analysts at Morgan Stanley expect 12 new states to legalize the pastime this year. And next we have what should need no introduction, Nike. High-quality businesses tend to turn challenges into opportunities, and Nike is an example of this. The company used the coronavirus pandemic as an opportunity to accelerate its transition to a direct-to-consumer business model, and shares could soar as these benefits trickle down to its bottom line. The whole idea behind this is Nike doesn't want to be just another wholesale shoe seller. It wants to embed its brand into the cultural landscape and eliminate the middleman so it could better control the customer experience. Fiscal second quarter revenue jumped 9% to $11.2 billion, with Nike direct sales growing 32% to represent $4.3 billion or 38% of the total. Nike's digital business grew by 84%, a trend that could be credited to the surging popularity of online shopping amid the coronavirus pandemic. Nike's consumer-directive offensive has yet to yield sustained margin improvements. Gross margin declined 90 basis points in the second quarter due partly to restructuring costs, but CEO Matthew Friend notes that digital sales earn a 10 percentage point higher gross margin than wholesale. And analysts at HSBC are confident that Nike can boost sales and EBIT growth as its higher margin distribution channels scale up. Penn National and Nike boast high valuations with forward price to earnings PE ratios of 53 and 37 respectively. But you often get what you pay for in the stock market, and quality comes at a premium price. Both companies offer the potential for market-beating growth as they bounce back from the pandemic and scale up their new expansion strategies. There you guys go. These top two Robinhood stocks. What do you guys think? Let me know in the comment section below. Like, comment, subscribe. This has been The Ignorant Entrepreneur. I'm out.